folks, Dan Frio here, the rate update. Today is September 28th, 2020. We're getting there, guys. So we're starting to add some of the background stuff. I got new tables coming, all the audio's good. I got to fix my camera a little bit. But that being said, good news is on the way. And same thing with mortgage rates. So don't go away. We're going to be right back with what happened to today's rates. See you in a minute. Okay, the Fed is coming in and saving the day for everybody. They're saving the day for mortgage bonds. They're saving the day for bonds. They're helping the stock market. That in turn is helping people's portfolios, retirement accounts, lowering rates on their credit cards, car payments, everything else. So if you haven't taken advantage of the low rates yet, even on your car payments, guys, if your note rate is high, and you worked on your credit a little bit, see if you're going to refinance. Yes, you can refinance your car too. But on this channel, we follow mortgage rates. So that being said, where are we today with rates? And I'm going to go over briefly, what we follow on a daily basis, why, for those newbies. And then for everybody that follows me on a daily basis, I have a new format, thanks to you guys for asking. I'm gonna start posting rates every day so you can see that there's not just one mortgage rate out there. It depends basically on your mortgage or your credit scores, the loan amount, the type of loan, and so forth. So every day I'm gonna go in a little more detail, but not all up front at once because I don't wanna lose you. We're gonna gradually build this thing to, at the end of this series, you're gonna get it. You're gonna say, okay, now I get it when it comes to rates. Remember, when you see those billboard rates at 1.99% and all that, it is basically a marketing tool to get you to call. And is that the rate you're gonna get? Probably not, unfortunately. But I try to peel back the onion peels on this thing to teach you not how to get hosed. So let's get on to how things work in the mortgage field or the mortgage industry. Okay, we follow this number right here, and this is called mortgage-backed security. It's a bond that trades on Wall Street that determines mortgage rates. This is the biggest factor in the benchmark mortgage rate, okay? So this number right here is what happened today to the bond price, okay? How bond prices work in regards to rates, there's an inverse relationship. So when you see the price go up, which is green, that's good. Prices go up, rates come down. The opposite's true for when the prices go down, rates go up. So we hate red when it comes to this number right here. So today it was up 5, really not enough to change the market. Well, if you're out there and you're looking to refinance and you're saying, you know what, I'm gonna just wait until something, please don't wait much longer. In a day, starting October 1st, we are going to implement a fee as well as all the lenders in the whole country. Most of them have already implemented, we have not. Effective December 1st, Fannie Mae and Freddie Mac on probably 80% of the loans that are refinanced are going to add a 0.5 point or a 0.5% fee on loans that are refinanced. Now there's some caveats behind that, and if you watch my channel in the past, we're trying to work it around that you don't have to pay that fee. So get in touch with us. We might be able to save you a 0.5 point in a fee. But basically what that's saying is anybody, any lender that uses Fannie Mae and Freddie Mac, and that's probably 95% of the loans out there, are going to incur this fee. Most of them have implemented it already. That fee was supposed to go into effect October 1st, but then it was pushed to December 1st. And so the loans had to have been closed, funded, and be completely done by December 1st. And that's why it's taking effect with us on October 1st. It gives us time to get your loan closed and transfer it out to Fannie Mae or Freddie Mac. If I confused you, I apologize, but go with it. As of October 1st, you're probably gonna see our rates go up at least 0.125. And that factor is built in to pay that 0.5 point to Fannie Mae and Freddie Mac. What is a 0.5 point? Basically, take your loan amount and multiply it by 0.5%. Okay, that's the best way to figure out that cost. All right, so that being said, here's what happened today with mortgage-backed security prices. It was up 5. So what we follow here is I try to, like anything else, there's trends. Like if you're watching a stock, you're watching it go up and down and up and down. You're trying to say, okay, when it comes down here, I'm confident enough, I think it's going to go back up because the trends are saying it's going to. So I'm going to buy that stock and watch it ride back up. Well, we do that same thing with mortgage-backed securities. There's a couple different lines in here, and I'll explain those briefly. There's a line here, which is a ceiling. A line here, that is a, daggone it, what'd I just do? A line here, a line here, and a line here. This line, the last line I did might be off your screen because I'm trying to zoom this up. These are all called, what we call them, Fibonacci levels. So this line here is a long-term ceiling. This is a short-term ceiling, this line here. This is a short-term floor, and this is a long-term floor. So you can see over the long term, I don't know why this keeps changing. Over the long term, these numbers should bounce between these lines right here. Okay, then that's what's taking effect. All right, in the short term, right through here, you're seeing it bounce in through here. So basically, we're trying to microscope this thing to see what's really going by tick by tick by tick. You won't believe, but every little tick in here, if you can get a 0.1% adjustment or a reduction in your mortgage, you could probably save thousands of dollars over the life of the loan. If you can get 0.2, 0.3, 0.5, what's that going to do for you? It could save you thousands upon thousands upon thousands. So I follow these trends for you, plus economic indicators, plus all this other stuff to make you an informed consumer and to make sure we lock you in at the ultimate time during your loan process, plus work with you with the costs involved because, like I always say, it's not only the rate, it also has to do about fees. We got 2 clients today. Both of them were paying over $7,000 in junk fees to their lender. We offered the same rate with $895 in fees. Okay, so they were able to save $6,000 to $7,000 each one of those clients, and we weren't talking $1 million loans. We're talking $200,000-$300,000 loans. So it's a substantial amount of money. So right now, my charting of this had us that we should be trading right in this line right here, okay? We're a little bit above that range right here. Again, up is good. This means rates are lower than anticipated. Why? The Fed and the government is still stepping in. The Fed, and I'm going to go through some numbers here with you in a second. It's shocking, but the government is also coming back, and it's election time. They're going to try to buy your votes and promise you the world. Take advantage of all this before the election, because once the election's over, a lot of things are going to go back to normal. So everybody's out there promising the world and giving stimulus and all that stuff. And it's a great time right now between the fee that's coming out and it's almost election time. If you like the numbers now, I would lock and run with this thing and don't look back. So that being said, the trend line is steady. I mean, we popped up a little bit right now. I anticipate it to come back down a little bit, and we should stay steady in this line. But you can see for about the last 2 months, we've been pretty much right there. So no shockers right there. The economic calendar coming up this week there's really nothing that should surprise us. There's some payroll numbers that came out, personal income. I think there is average hourly worked, consumer confidence, all this other stuff. There isn't anything in here that should shock the market. Okay, what happened today, though, is the Dow was up 410 points, thanks to the Fed and the government coming out saying, we're going to throw more money at this Corona thing to help everybody out. The shocking thing is, and I'm waiting for the debate to come out tomorrow, because you're probably going to hear one side of the aisle say, our deficit right now is, you increased our deficit X amount. Well, I don't want to blame either party. The government came in and said, we're going to do everything and anything we can do to stop basically our whole economy from crashing. So that being said, we took our national debt from 22.6 trillion from last year to right now we're at almost 26.8 trillion. That's 4 trillion more than where we were. $1 trillion. That's a lot of cash. And they broke it down in here. That's $11.4 billion of new debt per day. It is what it is. So here's the debate that I have, and a lot of people are coming out saying, okay, this whole debt thing's coming to a fruition, and that's going to increase inflation. There's more and more studies that I'm watching now because of our national debt has grown so much that it could be deflationary. That's a possibility. What happens in that, you see rates come down even further. So I'm really not predicting any astronomical rate increase in the next year. Even if the Fed jumps in and starts raising rates some to come off their benchmark, and I know they said they're not going to till 2023 or further, but if inflation starts to pick up, they might contemplate it. But I don't really see mortgage rates changing much in the next 6 months to a year. So if you're just not in a position right now where you can refinance, or you don't think you are, one of two things. One, give me a call or shoot me an email. Let's go through your scenario and see, why do you think you would not qualify? Okay, there's programs out there like an FHA Streamline or a VA, what we call an IRRRL, but it's a Streamline. As long as you've made your last 12 payments on time, you can refinance with no income or proof of income and no appraisal needed. So that being said, it makes it really simple to qualify to refinance your mortgage. What would the refinance do for you? Well, most likely your rate is 1% higher than it is today. That's where rates were about a year ago. That's one. Two, when you refinance, we can normally structure it that you're going to skip one, maybe in a lot of cases, 2 months of mortgage payments. So let's say your mortgage payment's $2,000. That's $4,000 you wouldn't have to pay out in the next 2 months. So that might be a savior for you. Or you might just say, my credit scores aren't there, or this and that. So let's go over that scenario. If you just know for a fact you're not going to qualify, hold off. And then when you're ready, let's look into it and go through every scenario possible on what can be done to help you refinance. All right. So that being said, that's that. The rest of the week is unemployment numbers. So that's what's coming out. Economic calendar, we went through that. The mortgage chart for today, and this was sent out earlier this afternoon, it's saying the 30-year conforming rate, the average conforming rate right now is 2.93. Well, I'm going to show you how that number is, I won't say deceiving, but I'll just say not accurate. Okay, so you can go to bankrate.com or all these other websites and see mortgage rates are 1.99 or whatever. Guys, remember, it's marketing. They're trying to get your attention. They're trying to get you to call. And then once they get you on the phone, they're going to try to sell you hard that, we can do this and it's doing this. The one key thing to watch for is one, the bait and switch. And then the two, the verbiage. What you don't want to pay attention to is, your out-of-pocket cost is only $500. I don't care what your out-of-pocket costs are. What are your total costs? Okay, so that's one area where we really want to focus on. All right. So that being said, these are where numbers are that you see all over the place. But I'm going to show you here in a second how this number is basically irrelevant. Let's get on to where rates are really today. And the format of this is, I want to show you how loan amounts, credit scores, what we call loan to value, which is the loan amount divided by the value of your home, how that truly can affect your rates in a crazy way that you had no idea about. All right. So these rates right here that we're going over, this is where our conventional financing rates are on September 28th, 2020. And I'm breaking it down is purchase or rate and term, which this means if you're buying a home or you're looking to refinance, just the balance of your mortgage. Okay, you're not looking to pull out any cash. So that's the top portion up here. Down at the bottom portion, this is if you're looking to pull out cash at a 75% loan to value. Up here is an 80% loan to value. So let's go line by line just so I can show you this. And tomorrow I'm going to add in FHA to this. And then by Wednesday we'll have VA. And then on Thursday we'll add jumbo. And then on Friday we'll do USDA. And then starting next week, I'm not going to try to keep you on here for a half hour, but we're going to go through each one of these on a daily basis to show you what's going on. And if nothing's really going on, we'll go through it real fast. But this is basically how we read, or how mortgage or credit scores and what they call loan to values affect your mortgage rates. So right here, how we break this down is if you're looking to buy a home or you're looking to just refinance your current balance, up to 80% what they call loan to value with a 740 credit score. Now, the terms of all these loans is a $250,000 mortgage or loan amount, okay? And then this is your loan to value. This is your credit score. It's based on a single family home, and that's basically the pieces of this puzzle all in a nutshell. So if you have a 740 credit score, and that's as good as it gets, I don't care if you have an 800, 807, or a 741, you're going to get the same rate. You have a 740 credit score at 80% loan to value. Today, I can offer 2.875 with an APR at 2.952. And this is equal to or the best rate in the country, okay, when it comes down to rate and APR. Now, what if you come back to me and said, hey, Dan, I got great credit. Here's my loan amount. Here's that. And it equals 80%. And so when I quote your rate, it's this. And then when I actually get your application and everything, I pull your credit's a 700, not a 740. Well, I might come back to you and say, oh, your rate's 3.125. Oh, no, Dan, you quoted me 2.875. Well, yeah, but you told me your credit score was perfect. So I want to make it clear. These are the credit scores that are in relation to these rates. And you can see they're dramatically different. That's why I always say, I need the rest of the puzzle so I can quote you an accurate rate. So it's 700 credit score and an 80% loan to value. Today I can offer 3.125 with an APR of 3.202. However, if your credit score is a 660, I got a 4.125 at a 4.2. Huge difference here, guys. And there's also variations between these. It usually goes 700, 720, 740. Every about 20 point increment, it goes all the way down to a 640 credit score. I only did these because I didn't want to sit here all night. So you can see the dramatic difference in this, okay? So now if you're looking to cash out, meaning you owe $100,000 on your or $100,000 on your house, but again, this loan is factored on a $250,000 loan, so that means you're taking out $150,000. So if you're taking out more than $2,000, $3,000, $4,000, it's considered what we call a cash out. Well, if you have a cash out, 740 credit score at 75% loan to value, it's 2.99, APR 3.06. If you have a 700 credit score, it's 3.375. If you have a 660 credit score, it's 4.625. And tomorrow we're going to go over why in some of these categories down in here, we're probably going to look at taking you to an FHA loan, because you might be able to get a 2.875 rate in this category here and pay the PMI or whatever that the FHA has versus a 4.125, because we're going to calculate your payments as well as your APR and everything else to see which file or what loan program makes the most sense. So that's basically in a nutshell. You can see how rates start. And again, you'll see a lot of advertising. We have rates as low as, and then they'll give you some obscure number. I can almost guarantee you when you call, you're going to be much higher than that because it's the marketing rate. If they posted, we have rates at 4.125, you'd never call that place ever. Nobody would call. So as marketing, we post these numbers not to deceive you, but I try my best to say, guys, there's a lot of pieces of this puzzle and I need those pieces so I can accurately quote your rate. So that is it for that. So let's get on to how I might be able to help you. So if you like what you see, here's what I ask my followers, my subscribers, and everything of that sort to do. If you want to reach out to me, I always say, if you're in the process right now, get a second opinion. Please get a second opinion. Just like if you had an ailment to your body or whatever, you want to get a second opinion. Guys, you're probably looking at a $500,000 loan, maybe $500,000 loan, maybe $1 million loan. That's a lot of money. So please get a second opinion. So here's the best way to do it. Go to my website. And my website is really easy to find. It's therateupdate.com. And there it is right there. If you want to call in, this is probably one of the best ways to get us. Call 844-775-LOAN. That's 844-775-5626. That'll get it's an 800 number, and there's no cost to it. My name is Dan Frio, DANFRIO. I'd love for you to Google me, check me out on the web, however you want to check me out. I've been doing this for 33 years. If you'd like to get a second opinion, if you've applied for a mortgage right now, that the lender you're dealing with had to have sent you a loan estimate or a fee worksheet, send it to me. Send it to me. I'm going to write all over it in red pen what I can do. I'm going to counter. Most cases, I'm going to beat them on rate, fee, or all the above. And as long as the information you give me is accurate, like we went over today, I can guarantee you that I can lock you in with I quoted you. So that being said, here's the best way to get me on email. So email me that loan estimate. My email is D for Dan, Frio, my last name, @preferredrate.com. If you'd like to start your application right now, just hit apply now and it'll get the ball rolling immediately. You need a rate quote, click here. You can do this if you're looking to purchase a house. This is a qualifier questionnaire. It goes through and answers some questions, and it gives us some information, so when we call you back, we're educated. We can route you in the right direction. Same thing here on refinances. So that's all I got for today. If you would, please don't forget to give me a thumbs up, subscribe down below, hit the bell. So if I do post a video that you like, I posted a video today, can you afford to buy Britney Spears' home? Check that out. So when you see the title, if you like what you see, watch the video. If you don't watch it. But I'd love to hear from you. Leave comments down below. And that's it. Hope you liked the video. Look to hear from you soon. God bless. Take care. Have a great night. Be safe. Bye-bye.